please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The mid-cap index is still down close to about 1/3 of a percentage point, and big knocks seen in names like Shankara Building Products, which is down close to about 4% though there has been some sort of a recovery, at least from the low point of the day. Dilip Bilcon too was taken around the chin for the second day in a row. So these are some of the casualties in the mid-cap space. But let's talk about the overall environment. Noted investor Mark Mobius says that he expects a 30% drop in the US stock markets as a result of the massive outflows. Listen in to what he had to say.
Volatility of all these markets is increasing. You know, not too long ago, a few months ago, everybody was betting on a very low volatility, and that's not happening anymore. And that's going to affect all markets, including emerging markets. There's no question about that. The problem now is the ETF situation, because more and more money is going into exchange-traded funds, and these funds move in the same direction at the same time. So if everybody's heading for the exit, it gets to be very, very complicated and crowded. So I think that's what's happening. That's going to be the next big crisis. I think a 30% correction in the markets is not unforeseen. I don't think that's going to be a problem. Since the beginning of 2016, we've had a tremendous bull market in emerging markets. Now there's been a correction, and I believe, of course, with the U.S. vulnerable, then, of course, emerging markets will be hit. But if you look at individual markets, there's tremendous growth. India is growing at 6%, 7%. China is growing at about the same rate. This is tremendous fast growth in these markets. And I believe that we're going to see lots of opportunities going down the road. Liquidity is not as great as, let's say, in the U.S. market. So with a lot of ETFs in emerging markets, you can have a big impact. Of course, that presents opportunities, because when you see a big correction, then there's a chance to buy. So I'm not afraid of it, but I'm saying to people, be ready for that kind of volatility.
Okay, that's Mark Mobius on the market. Let's look at trade now. We still have just about a 0.4% increase in the benchmark indices, pretty much a range-bound day so far. We've got Ashwini back with some advice. We also have Rajat Bose joining in. Ashwini, good afternoon to you after a long time. What's the outlook for the day now, looking at the way things are playing out?
See, the Bank Nifty is picking up again, and my sense is if it continues to go up this way, it could possibly get past today's high as well. Also, one other space is the cement space. It's had, one-way declines, and I think it's kind of getting to a place from where you could have a, decent bounce. So Ultratech, ACC, all of these stocks can be bought from here. And finally, Jubilant Food is also holding 2,500. So I think at some point that should turn. But overall, positive on the market, and looks like we should head higher from here for the rest of the day. Having said that, Britannia is a buy with a stop of 5,800, target of 5,950. Indian Oil is a buy with a stop of 168, target of 180. And Sundaram Fastener is a buy with a stop of 610, target of 645.
Ashwini, sharp knock in CG Power, down 10.5%. What are the charts telling you?
Difficult to say what is going on, but probably it's about, the margins getting increased and maybe mid-caps facing some amount of pressure because of that. But if this goes on, I think there could be several 10% losers in the smaller stocks today. Now that it's broken the 70 zone, I think 56, 58 could be likely on CG Power.
Okay. Ashwini, oil and gas is obviously a pretty strong theme today. Anything that you'd like? So, I mean, maybe not intraday, maybe even to carry positions over for tomorrow. This whole move on ONGC that's built up, some of the others like OMCs.
See, OMCs, ONGC, etc. These are, short covering plays. I don't think oil marketing will suddenly start moving to new highs. So, you can probably get into gas stocks like IGL, etc. But overall, I don't think oil and gas, given our position in the oil market, maybe an IGL or a Reliance. You don't want to mess around with these public sector oil companies at this point.
Okay. Thank you very much, Ashwini, for that. Rajat Bose is also here with us. Rajat, how are you approaching trade this afternoon and your picks?
Well, regarding the Nifty, I would say that if it sustains above 10,665, then there is a possibility that it might scale up to 10,684 to about 10,710. But it remains to be seen whether it sustains above 10,665 or not. If it doesn't, then it would come down. But I'm not expecting much fall unless it really takes out 10,640 to about 10,625. Having said that, I have chosen two stocks in the May futures segment, and both are a buy. M&M May futures, I would put a stop loss below 901.5. and target is 918, and IndusInd Bank I would put a stop loss below 1900 and my target will be 1925. May futures, so essentially they are intraday trades.
Okay, all right, Ashwini and Rajat, thank you very much. Before we take the break, let's pull up PVR, because obviously with the company now lobbying to get more FII participation allowed in the stock, there's a big surge underway. They want the FII limit to be hiked up to about 74%, so there's some trading action going on PVR for the time being. Well, on that note, let's move forward. The European markets would be opening any time now. So let's take a look at how things are shaping up. So fair bit of green. So it seems that the relief rally that we saw beginning from Wall Street spread across most of Asia. And for the time being, some of the indices that have opened out are positive. Let me actually take a look at some of the other names as well. Don't have rates for Spain and the Italian market just yet. Actually, I do have a rate for the Italian market. Let's pull that up as well. 0.6% on the higher side. So it seems peripherals as well as core right now seems to be stable. So second day of stability continuing as far as equities in the continent are concerned. Welcome back. You're watching Halftime Report. Some interesting moves on a couple of stocks like Supreme Industries, 5%. So that's a stock that's definitely finding some traction. I also saw Bombay Dyeing trying to recover from the lows. Let's see if we can get Bombay Dyeing up on the screen as well. That's another stock that has been on the move. Yeah, there we go. It's positive now. Bombay Burma, by the way, is also sitting on gains of 5% today. So interesting moves on some of these Varia Group stocks. The next one on our radar is Gayatri Projects. The company posted a steady top-line growth this time around. Margins expanded as well in the fourth quarter. Profit after tax was slightly higher. TV Sandeep Reddy, MD of the company, is now joining in to discuss some of the details. Sandeep, if you could start by telling us, what is the outlook going forward in terms of the order book that you ended FY18 with and the sort of traction that you're already seeing in the first quarter?
Yeah. So the order book, we have about 13,000 crores, FY18. And going forward, we are bidding for some more projects in the NHAI EPC tenders and some irrigation projects in Madhya Pradesh, in Karnataka also. Going forward this year, we are hoping to target another 4,000-5,000 crores of new orders in FY19.
Okay. What was the quantum of order inflows in FY18? And with these kind of inflows that you're targeting, what should be the expected revenue and margin growth?
So FY18 inflow order was around about 3,000 crores.
Okay.
The margin has been around about 16%, which we have been maintaining. And the present order book to bill ratio, we have more than 4 times, which supports a strong growth of about 30-35% over the next 3-4 years of revenue.
Okay. Just a question on the debt. At the last we spoke with you, I'm just looking at some of those details. Your gross standalone debt was around 2,000 crores. There was a plan of, slight debt reduction as well. Has that materialized? Where are those numbers now?
Yeah. The standalone debt has now, gross has come about 1930. Net is about 1690 crores. And we have reduced the debt by around 180 crores, but added, basically the long-term debt has come down by 180, but equipment loans have been added by about 40. So the net debt reduction has been 140 compared to FY 17, 18 and 17.
Do you have plans to reduce your debt further?
Further, we are trying to reduce by 20 by monetizing some of our non-core assets. So we would like to bring it down to 1:1 debt equity. Currently, now the debt equity is about 1.5 times from earlier 2.5 times, which was, we had done some capital raise, I think about 3 months back. And also better management on the working capital side has helped us actually.
Again, last we spoke, you mentioned that there are some plans to look at perhaps separately listing some of your power assets. Is
Yes,
that still in the pipeline? What's happening?
Yeah, of course. We have a joint venture with Sembcorp, and we have restructured our power assets into, along with the Sembcorp's green assets. And now the company, we are now, I think, filed for DRHP to SEBI, and I think in the next quarter, they would be going for IPO. So
Okay.
in that,
So that's,
we would then be able to monetize
so
some
how
of our
many?
power.
Yeah, so I'm just trying to understand from a monetary perspective, that would be assets worth how much that move off your books into this new entity?
So it won't move off our books. Basically, we have 600 crores worth of power investment in our books, which will get monetized once it gets listed.
Okay,
What
so
would your
600
stake
crores.
be in the listed company? Would you look to bring it down?
Yeah, of course. See, probably a year's time, we'll have a lock-in. After that, we will definitely look at reducing some of our debt.
Okay, no, just what is your current stake in the company then? In the listed company, what would it be?
Look, currently we have a 6% stake, but we have a call option to go up to 12%. So we are working on, the call option is at a very attractive price to the IPO price.
Okay.
So we would be taking up the call option, and along with that, we'll have around 12%.
Okay, and the valuation that you're seeking or Sembcorp is seeking?
That I think is, I don't know, because it's in the DRHP. I think maybe regulatorily I'm not supposed to give out. I think it's some, SEBI I think has some grace period. So I think I suggest you look at the prospectus actually.
Okay. All right. Sandeep, we'll have to leave it there.
Yeah.
Interesting chat. We will take it up another time as well. Thanks very much. We need to take a quick break on that note. On the other side, we get you a snippet of the conversation Udayan Mukherjee had with Edward Evans of Ashmore Investment Management as part of our special series.
After months of negotiation, the IDBI federal deal has now entered the final leg. We understand that certain key modalities are being discussed, but one of them could be a deal breaker. Yash is here with the details. Yash?
Well, Rima, before I speak about the key modality here, let's just understand where this deal between IDBI Federal Life Insurance stands at the moment. So what we're given to understand is that two players, Max Life Insurance as well as Aditya Birla Sun Life Insurance, there's a very neck-to-neck, a very close race between the two companies to buy 100% stake in IDBI Federal Life Insurance. Now, coming to that key modality, and that is on the front of bank assurance. The first one here is that there are negotiations which are on between the buyers and the sellers as far as the period of the bank assurance is concerned. Remember, bank assurance essentially means that the bank branches of IDBI Bank and Federal Bank will be selling the products of the potential buyer. So here the negotiations are on with respect to the period of bank assurance, whether it will be for 5 years or for 10 years. So that is one part. The second one and the more important one is essentially the exclusivity of the bank assurance. Remember, the insurance regulator allows these banks to have an open architecture when it comes to distribution of insurance products, which means that every bank can partner with 3 life, 3 general and 3 health insurance companies to distribute their products. But here, the buyers, which is Aditya Birla Sun Life as well as Max Life Insurance, are seeking an exclusivity, which means that they won't be allowed to partner with any other insurance company for selling their products, and they will only be able to partner with the potential buyer to sell their products. So these are two key modalities which are being discussed as far as the bank assurance is concerned. To understand this better, let's just put both of these companies in that particular fray. The bank assurance which IDBI Federal Life provides of over 3,000 branches of IDBI Bank and Federal Bank. What does that mean for Aditya Birla Sun Life? Aditya Birla Sun Life currently distributes 50% of its total insurance products through its bank assurance channel. But here, the partners are very small banks, be it Karur Vysya Bank, be it Deutsche Bank, be it the DCB Bank. So yes, smaller partners, and also HDFC Bank, but that is not exclusive. Of course, HDFC Bank also sells products from HDFC Life. So yes, these 3,000 branches of IDBI Bank as well as Federal Bank, when they come to Aditya Birla, that will add significantly to its bank bancassurance channel. As far as Max is concerned, they have two significant bancassurance partners at the moment in the form of Yes Bank and Axis Bank. But do remember, the bancassurance partnership with Axis Bank and Max ends in 2021. So really, to fill that vacuum which will be created with Axis Bank's exit, the IDBI Federal Bank will be very crucial of those 3,000 branches which really come in.
Okay, so let's see how this big deal actually eventually shapes up in the life insurance space. Thanks, Yash, for that. Moving on to CNBC TV18 exclusive, Udin Mukherjee caught up with Edward Evans of Ashmore Investment Management as part of our special series London Eye. Now, Evans says that emerging market currencies are performing well and that earnings are a sustainable driver for emerging market returns. Take a look.
The rupee's seen pressure given my comments around the current account deficit and so forth. It's at the minute there's a focus globally on currency pressure, and it's very important to take a few steps back and think of it as it's starting, I think, with investors generally taking profits of a euro versus dollar after the strong move in the euro against the dollar. And that sort of morphed into taking profits in also emerging market currencies, which have performed well, but also picking out certain markets, certain countries, and Turkey and Argentina are the obvious two, which are more sensitive, more vulnerable to a reduction in global liquidity. I think emerging markets have started a stronger cycle, and I think if you want to pinpoint the period it was in, sort of 2016, as you know, ultimately earnings are your sustainable driver of emerging market returns, and earnings reflect, if you like, where you are in a cycle. And of course, after a prolonged period of negative earnings expectations, it plateaued in 2016. It recovered strongly last year in 2017, which incidentally meant that the strong stock market move you had was very well supported. And it's continued in 2018. And I think the key focus for a fundamental manager such as myself is following the earnings progression. Earnings are also notably strong, broad-based across countries and also industry groups. So it points to an overall quite a constructive view on emerging markets.
And you can catch that entire conversation at 8:30 p.m. tonight on CNBC TV18 London Eye with Edward Evans.
We have Anisha Chenani of Monarch Net Worth Capital now joining in to track some commodity trading ideas as well. Thanks for being with us. Let's get started. What would the call be, first of all, on crude? Is there any sort of an intraday trade that you would advise now?
Hi, good afternoon. I think crude oil prices are, trading in a range manner after falling 10% last week, and this is likely to be there for next 1 or 2 days. Overall sentiment is still negative, so selling could be initiated, I think, and downside we can see the levels like 40 to 50 rupees downside from here. Overall, so there is a oil market rebalance that is happening, and we have seen that OPEC coming in with the news that Saudi Arabia and Russia are planning to again cut the production. So this all, tug of war would create a range-bound manner view for crude oil. So sell on current levels is advisable for 40 to 50 rupees downside from here.
Okay, and what about precious metals? You're recommending a buy on silver today.
Yes, because of all these uncertainties around, and there is a risk of sentiment in market due to US-China trade war, Italy, political uncertainty. I think gold and silver is getting some support gradually, and we have seen yesterday dollar index also topping out. So this is also giving some support to gold and silver. So today's recommendation would be buying silver above 40,200 at MCX. Only above prices sustain above 40,200 with a stop loss of 40,000, and I'm expecting the targets of 40,500 on the higher side.
Okay, all right, Anisha, we'll leave it on that note for today. Thank you very much for giving us those trading ideas. Moving on, the spotlight is back on Fortis Healthcare. The first step in the entire new bidding process will kickstart today. Let's get in Ekta straight away to understand how it's going to work. So the wheel has turned a full 360 for Fortis, right, Ekta? Now what? How will things progress this time?
Well, yes, we have been highlighting that, this is going to be the next 15-16 days in terms of a bidding process for Fortis. So what we can expect today is by 5 p.m. there will be the bidders who will probably give in their interest or the EOI or the expression of interest in terms of the fresh bids which will come in for Fortis. So what we can expect is that maybe the 5 old bidders that exist, so we know that Radiant has already said that they will be applying or reapplying in terms of an interest for Fortis, and the other 3 old bidders, which is Manipal TPG, Munjal Bermans, as well as the IHH consortium, have been asked to participate in this process as well by the board of Fortis, and separately we could probably expect Forsen. It'll be interesting to see who would probably put in a bid beyond these 5 names, or maybe put in an EOI or expression of interest. After this, what will happen will be a due diligence process for 10 days, and tomorrow actually the bidders will be shortlisted by the board, after which a due diligence will take place, and after which there will be a final decision, and then it will be obviously put to the shareholder vote. So today is the first day of what would be an expedited process.
An ongoing saga there. But a new drug launch by Lupin, Ekta?
Yes, actually, it is an important drug launch which is coming for Lupin. So it is in their branded segment where Lupin will be launching a drug in the women's healthcare space called Solosec. So it is for bacterial vaginosis. And why is this important is that, it is in the branded segment, plus the kind of usage of this drug is different from what is available in the market. So for example, currently in the market there are drugs which take a larger amount of time, so there is lesser amount of adherence to the entire program, plus you can't take it with alcohol, etc. in the US. So with this particular drug you can only take it once, and that's enough. And plus, it has tolerance to other factors such as alcohol, etc. So it doesn't really curb your lifestyle if you're talking about people in the US. And hence, it has potential versus the other drugs existing in the market. It could probably scale up to $100 million in the first year itself, according to analysts. And if the efficacy is proven, that means that if it actually works and it's better than all the other treatments available in the market, then it has potential to increase. So it's an important launch for Lupin.
Well, that's a real interesting parameter. Efficacy with respect to alcohol usage as well. And how well a drug performs.
No, not.
On a lighter note, Ekta, on a lighter note. Not at all. All right, on that note, we are completely out of time on this edition of Halftime Report, but do stay tuned. Business Lunch takes the action forward.